Good afternoon, everyone. Thanks for joining us this afternoon for Julia Shanks' presentation on Getting Started with QuickBooks, Part 2, Expenses and Sales. My name is Genevieve Goldleaf, and I am the Program Coordinator, or the Assistant for the CARET Project. Before we dive into Julia's presentation, I'm just going to tell you a little bit about the CARET Project and our presenter, Julia. So the CARET Project is a nonprofit based in Boston, Massachusetts, that offers financing and business assistance so that farm and food enterprises thrive. We offer specific programs for loan and financial technical assistance to farm, forestry, and fishery businesses, and to processing, distribution, and storage enterprises with any type of local agricultural product. We work with businesses at all stages, from pre-startup to maturity, including those who are having trouble obtaining financing elsewhere, such as startups and beginning farmers. That said, businesses that already have a working business plan are ideally suited to apply for a loan or technical assistance. Our capital or operating loans range from $5,000 to $75,000 at 4.99 to 7% interest. Applications are due the first business day of each month, so our next application deadlines are April 1st and May 1st. It typically takes us about 8 weeks from the time a completed application is received to you having funds in hand, but you can start working with us earlier than that, so do get in touch soon if you're interested for this coming season. The free technical assistance services that we offer include assistance preparing application materials, developing cash flow projections and enterprise budgets for new projects, reviewing business plans, evaluating financial options, and determining business profitability, growth, and direction. We are sometimes able to work with non-borrowers in our service areas to provide technical assistance, so feel free to get in touch to find out if you're eligible for that. The regions that we serve include Maine, Vermont, Massachusetts, the Greater Berkshires, and the Hudson Valley. Outside of these technical assistance and loan programs, we also conduct research and collaborate on trainings. Our current work includes offering Train the Trainer sessions to increase the quality of financial technical assistance available to farm and food enterprises, sharing our innovative financial models, and ongoing research to demonstrate the impact of financing and business assistance on small farm viability. If you would like to find out more about our programs, do check out our website, which is thecarrotproject.org, as you can see on the screen, or contact our Loan and Business Assistance Coordinator, Benneth Phelps, at bphelps, BPHELPS, at thecarrotproject.org. Benneth is also joining us today on the webinar and will be available to answer questions about the CARET Project's programs after Julia's done presenting and answering questions about the presentation. Okay, so with all that said, it is my pleasure to introduce our presenter today, Julia Shanks. Julia is a Cambridge-based chef and entrepreneur who consults with food businesses and farms, helping them maximize profits and streamline operations through business planning, feasibility studies, and operational audits. Her clients include Life Alive, Cuisine on Locale, the Elephant Walk, the Massachusetts Department of Agricultural Resources, and City Growers. She lectures on sustainable food systems and restaurant accounting, sits on the advisory board of Future Chefs, and is the regional leader of Slow Money Boston. Julie received her professional training as a chef at the California Culinary Academy in San Francisco, her BA from Hampshire College, and an MBA magna cum laude from Babson College. We're very glad to have her with us today, so thanks, Julia. I will let you get started in just a minute, but I want to mention how we're going to structure the webinar before we dive in. So Julia will pause for questions a few times during her presentation, and then we will have at least 15 minutes for questions at the end. Because there are going to be a lot of folks on the call today, if you could type in your questions into the webinar viewer as we go along, I'll read them out and Julia will answer a few during the presentation and the rest after. And after she's done, we'll have some time for folks to ask Benneth questions more specifically about the CARET Project's programs. And also to cut this one off before the pass, we will be posting a recording of this webinar along with Julia's slides on the CARET Project's website about a week after the presentation, and we'll be sending out a link for that as soon as it's up. So don't worry if you are interested in catching a particular part again. Okay, so I think that's that. Thanks to those of you for sticking with that whole spiel who've joined us before. And without further ado, I will turn the floor over to Julia.
All right, so you guys should see my PowerPoint slides. Is that correct?
Yes. Excellent.
Great. Well, welcome. Great to have you guys here back. Before I dive into my QuickBooks Part 2 webinar, I just want to put out a few disclaimers. As you may know, there's 3 different versions of QuickBooks. There's QuickBooks for the PC, Mac, and then there's an online version. The functionality is the same. The things that you can do within the 3 versions are the same, but how they look is going to be different, and how you find the different features is going to be a little bit different. I'll touch on it a little bit, but just know I'm going to be showing you examples from QuickBooks for the PC. So it's going to look a bit different for you if you're not on a PC. I have a sample file that I'll show you and use as an example, and the numbers are completely made up. So don't think that this is a real business or this is how your numbers should look. They're made up. You'll obviously need to make adjustments to your own file as you see fit and based on your own business needs. So we're going to do a quick review of some of the things that we went over in the first webinar, and if you're already familiar with QuickBooks, this will be just a review for you. We're going to talk about how tracking bills can help you manage your cash flow. We're going to learn about using classes and the customer job functions. We're going to go over general journal entries and inventory tracking. So we're getting a little bit deeper into the functionality of QuickBooks, not just, a jacked up checkbook register, but really starting to use it as a management tool. So first, let's talk about organizing bills. So you may recall from the last time that there's 2 ways to enter your expenses into QuickBooks. The first way is if you enter a bill, in which case you must pay a bill, and you have to do both with each other. If you enter a bill, you've got to pay a bill, otherwise it makes QuickBooks a little bit nutty. But if you don't want to enter a bill, you can just write a check. So what I'm going to do is I'm going to quickly scoot over to my QuickBooks file. Okay. So you guys can see my QuickBooks screen now, hopefully. Is that right? Okay, I'm just going to assume you can. All right, so just to refresh your memory, this is how we enter a bill in. So let's say you want to buy something from, the hardware store, and you have an account there. You'll go ahead and enter it in. You want to make sure that you enter in the date of the purchase, so if you ever want to look back at your financials and know what you spent each month, so you can really get the nuance of the seasonality, you want to enter in the date when the bill came in and when the expense was occurring. So let's say you purchase some potting soil. It costs $650. You're using it to start your seeds. $650. So you also want to make sure that you put in the due date, so that way QuickBooks can start to track when the bills are due. Another example, let's say that you get your insurance bill, and you may want to pay your insurance bill in 4 installments. So let's say, for example, your insurance, it comes in at $714. You want to pay it in 4 installments of $178.50. So you might want to put in $178.50, and it's going to be for your insurance, general liability. Thought I had these all set up. So we'll set it up as general liability insurance, and then the first one, let's say, is due on April 5th. And then you can do it again. And then the next bill is due on, let's say, June 5th for $178.50. Or, yeah, $178.50. And you can keep doing that. So now you've got your bills entered into QuickBooks, and you can start tracking them. So let me show you what this looks like. So there's a couple of ways that you can now utilize this information that you've entered your bills in. First of all, when you go to the Pay Bills function, you can see all the bills that you've entered in. I've entered in a bunch of bills. Let's say you want to know what bills are due by the end of the month. You know that you're going to get some cash in on April 1st from your CSA subscribers, but you got some bills that are due by the end of the month. So you can also sort when your bills are due. This, you'll see right here what your balance in your checkbook is, so you can keep track of what you owe and how much money you have. So that's one way to use the pay bill function as a way to manage your cash flow. You can also see a summary of the bills that you owe by going to Reports, Vendors and Payable, AP Aging Summary. And AP is Accounts Payable, and it's a summary of when your bills are due and how late you are. I apologize, this is very hard to see, but you'll see several columns. You'll see current, and those are all the bills that are due but not past due. So for example, if a bill is due on April 5th, it's current. It's what is it, March 26th right now, so you still have a few days until your bill is due. If it's 1 to 30 days, that means that the bill is due, it was due a few days ago. So for example, if the bill came in March 1st but was due March 15th, it's now 11 days overdue. So you'll see that in the second column. Bills that are overdue by 31 to 60 days and more than that, and so on. So this is a way to see, if you're starting to get yourself into a cash crunch, it's a way to see where your most urgent bills are. You can see if you have things that are over 90 days old, you may need to prioritize them, or maybe not, depending on who your vendor is. You might have a very good relationship with them and they may be able to help you. But it's a way to manage your cash flow, prioritize what bills need to be paid when and how much. Another way to utilize the pay bills function and take advantage of it for managing your cash flow is to go to your balance sheet. So you go to Company and Financials, Balance Sheet Standard, and now we can see here we can see what we have in our checking account. It's $3,200. And if we scroll down, you can see the total in accounts payable is $3,400. So what that means is that you have more money owed to your vendors than you have in your checking account. So you may be thinking, oh, wow, look at me, I've got $3,200. But you really don't, because you owe it to your vendors. So it's a good way to keep an eye on what you have and what you can really use. Let's say you had $6,000 in the bank instead of $3,000. Well, you really only have $3,000 to spend because you need to make sure that you save your money for your accounts payable. So by entering the bills in, when they come in, even if you're not going to write a check instantly, it's a great way to keep track of your cash flow and make sure you don't get yourself in trouble. So I think we're going to take a break for questions right now. So I'm going to switch back to my PowerPoint slide.
Yep, we have got one question so far. Does QuickBooks look at calendar days or business days when calculating bills or other items, and can you choose?
It goes by days, number of days, just calendar days, not business days. So when you're talking about the accounts payable and how far overdue they are, it's just counting calendar days.
Okay, if anyone else has a question, feel free to write in. Otherwise, that's all we've got right now, so Julie, if you want to go on, I guess we can get to questions in the next bit.
Okay. So the next section we're going to talk about is classes and customers and jobs. So far what we've done is we've been entering in our expenses, and we've talked about entering in revenue, and we've got a pretty good picture of the farm as a whole. But things start to get a little bit complicated when you want to start to see more nuanced picture. How's your CSA doing? How's the farm stand? How are your flowers? And it gets tricky because you sell your flowers at the farm stand and at the farmer's market, and your eggs get sold through the CSA and through wholesale. And trying to tease apart the different revenue streams and the different sales channels, and it just gets glommy and messy. So that's when we want to start using classes and customers, because it gives us a way to separate the revenue and expenses by the different products and the different sales channels. And what I mean by sales channels is, how do you sell your produce, or how do you sell your products? Where do you sell them, if it's at a farmer's market or a CSA? So we see a cross-section of where you sell your products, and what products you sell. And then it starts to give you a more nuanced picture of the profitability of these different sales channels or the different products. So you may recall in the first webinar we talked about when you set up your chart of accounts that you want to set your revenue accounts either by your sales channels or by your products. And that's not to say that you just because you set your revenue by farmers markets, it doesn't mean that you don't want to know how your beef operation is doing. Absolutely you want to know. But you also want to know your farmers market. So this is a way to help untease the different sales channels. I love my little animation. Worked hard on that. Hope you all like it. So another way to look at it is, here is your income statement as a whole. And by using classes, we can start to break it out. So for example, you may sell eggs through the wholesale CSA farm stand and farmers market, and you may sell to the wholesale accounts just eggs and produce. So now we're starting to see a cross section by using classes to see how each individual entity is doing. So you can see the profitability of the eggs and start to aggregate the egg sales from the different sales channels. And you can see the profitability of the produce by aggregating the produce from the different sales channels. So let's go into QuickBooks and see how it's done. Okay, so the first thing I want to point out is that when you set up QuickBooks, classes are not automatically going to be turned on, so you're going to have to change that setting. And to do that, you want to, this is actually an important point where it's different between the Mac and the PC. So in the Mac version, you have a little QuickBooks icon over here, so the preferences is going to be over there. And in the PC version, it's here. So we're going to go to Preferences, and we'll go to, excuse me, we'll go to Accounting and Company Preferences. And you want to make sure to click Use Class Tracking for Transactions. And in this case, I checked Prompt to Assign Class. You don't have to. You can uncheck it. Not everything necessarily has a class, so you may need to have a general category such as overhead to catch everything else that doesn't go to a specific one. So click OK. And in this case, for this company, I'm going to just show you the chart of accounts. I chose to do the revenue by the sales channel. So it's CSA, farmers market, farm stand, and wholesale. So I'm going to make my classes the opposite of that. So I want my classes to be, eggs, flowers, fruits, meat birds. I put in overhead as a catch-all. So I found my list here. So under List, Item List. And then if you want to create a new one, you can go here. The shortcut is Control-N. On the Mac, the shortcut is Command-N to create a new class. All right, great. So now we've got classes. So let's say you come home from the farmer's market and you've had oh, you know what? I'm not going to do it that way. You come home from the farmer's market and you had a great day, and you went. You want to say that you had farmer's market sales, and you had egg sales, and let's say you sold $100 in eggs. It's the same farmer's market, and you had farmer's market sales, and you sold vegetables. Let's say you sold $600 worth of vegetables. You sold some flowers. So now you're able to get that cross-section between the farmer's market sales, which is going to be your income category, and your classes of your revenue, the different types of revenue. So you'll notice that I put in farmers markets here. So this is the column for the customers. And for a farmer, you don't necessarily want to, track every single CSA customer or every single person that walks up to the farmer's market, but you may want to track individual farmers markets or different wholesale accounts. So for example, you may go to the Cambridge Farmers Market and you may go to the Lexington Farmers Market, and you want to be able to track the difference in revenue between those two markets. So here's a chance to now specify which market that you went to. And again, it gives you another cross-section of how your business is doing. So we'll save and close. Similarly, when you enter in expenses, excuse me, similarly, when you enter in expenses, you can also assign classes. So let's say, you go to the hardware store and you spend $600 and you bought, $100 worth of flower seeds, and you can do for flowers, and then you bought some mulch, and you bought $300 worth of mulch, but those were for the vegetable beds, and then you bought some feed, but that feed was for your layers, so that's for your eggs, and maybe you bought some more feed, but that was for your meat birds. So now, I did more. I got a little carried away there. So now you can start to separate not just, I bought $300 worth of feed, but I bought feed for the eggs, for the layers, and for the meat birds. And, you can separate the seeds that you buy for flowers versus the seeds and products that you buy for vegetables. So now you're getting a sense of the expenses associated with each of the classes. Similarly, let's say, you go to the printing store and you go buy $100 for a sign, and it's, signage, but you want to assign it to a particular farmer's market. So, one farmer's market, you want to get a specific sign. So now you've got the expenses associated with that particular market. Or maybe you go to the gas station to get, fill up your tank with gas to drive to the farmer's market. You can assign it to that particular farmer's market. Now, it's automatically going to default to billable, and you want to uncheck that box. What that means is that if you created an invoice for that customer, for that particular farmer's market, it's automatically going to tell you to put that expense on their invoice. But since you're not actually billing the signage expense to the farmer's market, you just want to track what the expense was, you want to make sure you uncheck billable. So we'll save and close. So now we can start to see the nuances. We're taking advantage of using the classes. If we run a profit and loss report, I'm going to look at last fiscal year because there's more number in there. So if we look here, we just see the general summary. Oh, we had, $107,000 in CSA sales, and we had, $14,000 in wholesale sales. But if we add a column for class, now we can see, all right, well, how did the egg sales break out between the CSA shares or the restaurant sales? And how did the flower sales break out between the farmer's market and the CSA? So now you've got a little cross-section of how each product is doing. And for example, if you bought feed for the eggs, now you can see the expenses associated specifically with the layer chickens, and you can see the expenses associated specifically with the flowers. And when you scroll down, you'll see the profit margin of each of these product lines that you have. Now, the unclassified generally means that there was no revenue associated with it, so that will be negative. And in the next webinar, we'll talk about how to deal with allocating expenses across the different product lines that you have. Okay, let me just check my notes. Does anybody have any questions right now?
Yes, we've gotten a bunch of good ones. First off, what does different classes mean when you're talking about that?
Okay. Let me switch back to the PowerPoint. Hold on one second. So the different classes are used to do a cross section. So you'll see that going down, the income accounts, we have the sales channels, where we sell our products, and then the classes are the products that we're selling. Alternatively, if you wanted to make your income categories the products that you sell, you could then make your classes the sales channel. So it's a way to take a cross section because, if you can't decide whether you want to track it by eggs and products or if you want to track it by sales channels, you can use the classes to track the other side of the chart.
How detailed would that get, though? Like, if you wanted, I'm rephrasing somebody's question, if you wanted to detail something like if you have two kinds of apples, Northern Spy apples versus Ashmead kernel apples, or how small down can that granulation get?
You can certainly go down farther. I think that there's a point where the return on effort is not great enough, and if you want to track different apple varieties, the data entry and every time you buy, let's say you buy insect spray for the apples. It's like, oh, did I spray the Spy or did I spray the Empires, and which one did I spray? And so it can get down to a pretty fine detail, but certainly you could do that. Let me just switch back to the QuickBooks and I'll show you. Let's see. So when you go to the class list, and we can create a new one, we can, let's say, do apples and make it a subclass of fruit. So you can then add a subclass so you can see the totality of fruits, but then you can also see the apples. Similarly, if you set a class to apples, you could then do subclasses of the different varieties. Other questions?
Got a couple more questions about classes. What are some other ways you can use classes besides for products? This person is mentioning that on the last webinar you mentioned tracking for different departments, which in the case of farmers could be different small farmers. I'm hoping I understood that correctly. But what are other ways you can use classes except for products?
I guess it really depends on how you see your business. I'm trying to think of a good example. If you want to track your greenhouse expenses versus your field expenses, if you want to track, your harvesting versus your sowing, pre-production and harvesting, and the different types of, the different phases, you could do it that way. The challenge with classes is that you can only slice and dice it so many ways because, for example, let's say you want to track, pre-harvest and post-harvest expenses. It could also be that those expenses are related to the vegetable production as well as the pre-harvest. So you can only assign one class. So you need to think about what's going to make the most sense for your business and how you want to track it. If you want to start tracking a third level, for example, if you want to track pre-harvest versus post-harvest labor or, field versus greenhouse, you can then use expense categories to get that further level.
Okay, and one last question. And there's a couple others we can come back to. What about classes versus items?
So items track two income and expense categories. So let's go to this item list. For example, let's say you sell radishes. I'm going to open that up. So the item is radish, and every time you enter it into an invoice, it's going to then track it to restaurant sales. So you can do it however you want, but it's just another way to get down to another level of specification, because then you can track your radish sales and how those are going. Similarly, if you're you can track items for your expenses as well. So if you're going to the hardware store and you want to, track the different types of seeds that you purchase, so you can monitor the cost, you can then enter expenses that way as well.
Okay, great. Do you want to keep answering questions now, or should we just come back to the rest of these?
I think let's come back to the rest.
Okay.
Okay, so let me switch back to my PowerPoint. All right, so the next thing we're going to talk about is journal entries. And we're going to talk about journal entries really as a precursor to talking about inventory. And this is where it just gets a lot of technical accounting jargon, and I'm going to try and make it as simple as I can. So journal entries is really a way of putting money in one bucket and moving it to another bucket. So for example, let's say, you go to the gas station and you get a receipt and you put it in your shoebox of receipts, and it's in the shoebox, it's labeled fuel expense. And you go, to the garden supply store, or, you go to Johnny's and you buy seeds, and you take that receipt and you put it in the shoebox that's labeled seeds. And then at the end of the month, you say, oh, well, I've got these extra seeds, so I want to move it from the bucket of seed expense, and I want to move it over to my inventory bucket or my inventory shoebox. So journal entries is a way to move money from one bucket to another bucket. And this is classic double entry accounting, debits and credits. And, we think about debits and credits. Typically, we think about credit is an increase and debits is a decrease. And in accounting and in QuickBooks jargon, debits are the left side and credits are the right side. And it's not about increase or decrease, it's just the left and right side of the column. So when you kind of think about it intuitively, assets are asked backwards. And that means that basically if you have an increase in the value of an asset, you're actually going to debit that account. And if you have a decrease in the value of your inventory or your asset, you're going to credit the account. So assets are asked backwards. Liabilities and equity follow your intuition. Credits increase the value and debits decrease the value. So this is an example of a general journal entry window. So, we're just going to show, for example, that in this example, we're increasing the value of our inventory. And, oops, oh, well, now we got a joke as long as we're here. So we're increasing the value of our inventory because we're debiting it, and we're also increasing our expense, or decreasing our expense of seeds, excuse me. So we'll get into live action in a minute. You already saw that. You can find the general journal entry right here. So when do you use general journal entries? The first way, which we're going to really go into detail now, is about making adjustments for inventory. And this is the reason why you want to do this is to get a real understanding of your expenses and your profitability. So let's say in 2015 you buy $500 worth of seeds. So you mark it as an expense, and you got $500 worth of expense, and you had $2,000 in revenue, and you showed a profit. But at the end of the year, you say, whoa, I had $100 worth of seeds left over. So in fact, your expenses were less than that. So you want to recognize that the expenses were less. Your year was actually a little bit more profitable than you thought. And also, you want to make sure that the expense of the seeds, that $100 that you didn't use in 2015, which you're saving for 2016, you want to make sure that that expense shows up in 2016, because you want to make sure that 2016 shows an accurate reflection of the business that you did. If you don't have that seed expense, then that year looks a little bit better than it really was. So you want to make sure that you're moving the expense of the seeds from one year to the next between the inventory and the expense category. And then if we have time, we'll talk about using journal entries also as a way to record sales. And what I mean by this in terms of recording sales with multiple products and multiple payment methods, if you go to the farmer's market and you might have $500 worth of sales, and some of it is eggs, and some of it is produce, and some of it is flowers, and you get the money in by credit card and checks and cash, and the credit card hits your account one day, and the checks and cash hit your bank account another day, and it's just this big gloppy mess of revenue coming in and going into the bank. So general journal entries are a really great way to sort that out, and we'll get to that at the end. So before we go into showing you how these journal entries work, I want to give a little more background about inventory. I'm hoping that this understanding of accounting will help you understand how it works in QuickBooks, because it's a sticky, messy concept, and I think it helps to really understand the accounting basics. So inventory is an asset, and the textbook definition is something that gives future economic benefit as the result of a past transaction. And the assets show up on your balance sheet, and they can include things like large equipment, building, seeds, livestock. So future economic benefit as the result of a past transaction. The past transaction is that you went out and you bought it. So you bought seeds, and it's in your inventory, or maybe you bought chicks. And the future economic benefit is the revenue that you get. So if you bought seeds, the future economic benefit is that it grew into tomatoes and lettuces, and you sold it and you made money. And if you bought chicks, the past transaction was purchasing the chicks, and the future economic benefit is the eggs that they laid and then you sold. So there's a couple of types of inventory, and how we treat it in QuickBooks is, inventory is inventory, but how we treat it in QuickBooks is going to be a little bit different. So we want to think about inventory as things that we actually purchase versus things that we generate on the farm where there's no external transaction. And this came up in the first webinar, so I'll try to address it somewhat here. So the products that we purchase, it's really straightforward, and I'll show you the transactions in a minute. And then the things that we grow and raise, we need to figure out how to get them into QuickBooks, and it's a little bit more complicated. And then the way we count inventory is either quantified by a dollar value. Did we buy $500 worth of seeds, or are we going to count each seed and then measure each seed when it goes out? No, we're not going to do that. We're going to just say we have $500 worth of seeds. If you send steer or cattle to the slaughterhouse and you come back with meat, you can track it as $500 worth of beef, or you can say, all right, well, I've got, one package of beef tenderloin at this much, and I've got one package of ground beef at that much. So that would be an identified product. For the purposes of most farms, I would say let's just talk about dollar values. So this is an example of the income statement and the balance sheet. So income statement, we have revenue, we've got expenses, and we've got net income. And the balance sheet is what you have, whether it's the inventory or your structures or cash, and how you got it. Did you take out a loan? Did you get vendors to support your purchases, to finance it through accounts payable? Or did you put it in through your own money? So inventory is an asset. It's on your balance sheet. and let's say it's a calf. And then when you sell your inventory, whether it's an animal or vegetables, the inventory comes off your balance sheet. It becomes an expense. And then you also have the revenue because you sold it. So it's a bit of a complicated transaction, but let's talk about this in QuickBooks. So I'm going to switch over. Okay, close that out. All right, so let's say you go to some vendor and buy $500 worth of seeds. So right now we show, I'm going to click seeds here as an expense. And $500. For simplicity's sake, I'm just going to call it vegetables. Then at the end of the month we go, or at the end of the year, we go back into the barn and we count how much seeds we have. And we realize that we still have $100 worth of seeds. So we want to take into account that we didn't actually utilize those seeds this year. So we're going to make a journal entry. So actually what I want to do before we do that is I'll show you company and financial, profit and loss standard. So let's say we have $150 worth of inventory. And at the end of the year, we have an extra $100 worth of seeds. So we want to move it out of the expense column and into the inventory column. Make a general journal entry. So the seed, we still have $100 worth of seeds. So in this example, we're decreasing the expense or increasing our profitability of the seeds, and we're increasing the value of our inventory by $100. So if we go back to our balance sheet, we can now see that the value of our inventory increased by $100. And that was just moving the value from one bucket to the next bucket. On the flip side, if we go back at the end of the year and we realize, oh, geez, we don't have $250. We started with $250 worth of inventory, but now we only have $100. That means we used up our inventory and it generated revenue for us. It was an expense now. So now we want to move it out of the inventory bucket and into the expense bucket. So we'll do another journal entry. So we'll credit, let's say, $200 worth of seeds. And now we've got the seed expense. Save and close. And now we can see that we've decreased the value of our inventory and it's moved over. And if we look at our profit and loss statement, we can see that, the value of our seeds has been moving back and forth similarly. Does anybody have any questions about journal entries so far?
We have gotten a couple. Okay. First off, when do you move inventory into expense? The month you plant seeds, the month you start selling the produce from the seeds, or what?
Ideally you would do it once a month, but I think what happens is, the reality is the farming season gets really hectic, and it's one of those things that at the end of the year that you want to settle it up. So you'll do it as a year-end adjustment. But, if you've got the bandwidth and the capacity to do it on a monthly basis, awesome.
Great. Okay. Next question. Why would you not just put seeds in as an expense to begin with rather than considering them as an asset? This person understands it with livestock, but not so much with seeds.
Oh, absolutely put it as an expense in the beginning. Absolutely. But at the end of the month or at the end of the year, if you haven't used all the seeds, you want to take it out of the expense category and then move it to the inventory category, just to recognize the fact that you didn't actually use them, and you'll get the benefit of those seeds next month, next year, next season, whenever.
Okay, does anyone have other questions about journal entries? We've still got a lot of backlog on questions about classes, but I'm thinking it makes sense to treat those at the end altogether.
Well, why don't we go back to classes, because I can show you my last slide, which I believe was thank you very much. And does anybody else have any questions?
Okay, here's another one about journal entries, actually. So this person's accountant showed her how to use the journal entries to account for unresolved issues, like a restaurant that never paid and went out of business. So is that okay to move from the A/R bucket into the bad debt bucket?
Absolutely. That's exactly how you would want to do that. So why don't I go back to...
Sorry, we're switching around so much.
No, that's fine. That's fine. And unfortunately, I just had to do that myself. So it could be that it's in the accounts receivable. So you might need to move it out of the accounts receivable, actually. Or if, you want to just, maybe it was, a CSA check that bounced. So you would say that, so let's say that, so now you need to say, well, I didn't have the revenue, but I did have the bad debt. So that's how you would move it over.
Great.
Okay. And a lot of times, and I do this too, and right now I'm looking at the debits and the credits, and I'm like, oh gosh, did I get that in the right way? So what you can do is save and close. I'm going to save it without the classes. Yes. And then, oh shoot, you know what? I did it backwards. Because now when I look at my expenses, I see that bad debt was down $100. So I must have done that backwards. So I need to go back and adjust my journal entry. So, I think it's confusing for all of us, and I've been doing this for a long time, and I still have to double check my work. So then you want to go back to your previous journal entry. And you want to then make sure that you adjust it that way. All right.
Okay. Do you want to do one final question on this and then move on?
Sure.
Okay. So when you use inventory for the following year, do you need to debit the sale and credit the inventory?
Not the sale. So then when you use the inventory, okay, so then you have your inventory. So inventory is an asset. So to debit it would increase it. To credit it would decrease it. So you've decreased the value of your inventory, and then you had your seed expense, and that's going to be a debit. And because you're increasing, it gets complicated. A debit is an increase in expense and a decrease in profit. So that you'll credit the inventory account and debit the seed account. So that's, now you're moving it out of the inventory and into the expense category. The one thing that I want to caution you is that QuickBooks is so fussy when it comes to debits and credits. And if you try to enter something on one side, it's going to tell you better put in on the other side too, and it's going to yell and scream at you and won't let you save it until you make sure that both sides match. We're doing right now one-for-one exchanges, so it's pretty straightforward. But if you're doing bigger exchanges, multiple categories at one time, it's going to be harder to keep it straight. So just be careful to make it all come out even. Other questions?
And there are lots, but I'm thinking a bunch of them make sense together, so we should probably just handle them at the end.
Okay. Well, we are at the end.
Oh, so we are.
Yeah.
Very well. I see. Okay. In that case, is there any fear of double counting in any of the classes or products?
The way I'm not sure I understand the question, but the way things can get double counted is if you enter it in as a bill. For example, let's say you enter a bill for your seat expense, and then got all these windows opened up. So let's say you enter in a bill here for seat expense or deer fencing. And instead of paying the bill, you just go straight to writing the check because you don't use the pay bill function. You just go to write a check, then you're going to double count. So that's why it's important to use pay bill. The pay bill also helps you make sure that you can keep track of what you owe when.
Okay. Great. Next question. Some farmers do want to track every single CSA member. How would you suggest going about doing that?
I would do that with a sales receipt. And then you can enter in each customer here. You can enter it in by the item number. You could say, CSA Summer Subscription. And then we can, if you want to, on your item list, we'll create a new item and a non-inventory part. We'll call it CSA Summer Subscription. And then make sure that it tracks to Summer CSA. Okay. So then you can, CSA Customer. Then you can do CSA Summer Subscription here, $400, and now you can keep track of what that customer owes and what they've spent. So you'll have a little window right here of all the transactions that you have for them. But you need to do it in a sales receipt. If you do this just by making a deposit, a lot of times, you may just have your fistful of checks. You're taking all your CSA subscriptions right now. You may have your fistful of checks, and you might do, customer 1 and customer 2, and it's CSA, CSA revenue. And if you don't, if you just do it here, then you won't be able to track their payments. So it's important to do this as a sales receipt.
Okay, you may have just kind of answered this question, but somebody else asked, does it make sense to use QuickBooks to track CSA members' payments check by check?
If you want to, you certainly can. Everybody has a different bookkeeping system, and certainly QuickBooks can do this. So if you're going to track individual customers and all their payments, you might as well do it once in QuickBooks using sales receipts as opposed to doing it in a separate spreadsheet or a separate notebook.
Okay. On a different tack, this person writes in, we have multiple farmers that buy and sell vegetables for our collective. How would that work? They each have expenses and income that we would like to track, but separately.
Well, there's an example of when you can use classes. So each farmer would be a class. So all their revenue and all their expenses would be tracked using a separate class.
Okay. I feel like there was another follow-up about that. No, maybe not. Okay. Next question. If you're using classes to track labor on various crops, how would you go about doing that? For example, can you track labor on tomatoes versus labor on kale separately, or different kinds of activities?
Yeah, there's a couple of ways. Nope. So there's a couple of ways you can do it. So one is if you're using a weekly timesheet. So Charlotte Ray. Does anybody remember Charlotte Ray, The Facts of Life? Um, so you could set up your service items here. So maybe you want to put in something for picking tomatoes or harvesting or planting. And then, if you have them working on vegetables, you can sort it that. And then you can say, all right, well, they did 2 hours on Tuesday and 5 hours on Wednesday and 3 hours on Thursday. And then they worked on flowers and they did 4 hours here and they did 6 hours there. So you can start to track time that way. So you can definitely track labor that way. And then when you go to write that employee a check, it will then ask you to, do you want to use the hours that they worked? And you say yes, and then you can write the check.
Okay, great. When one breaks down expenses on paying a bill or a check, how do you add tax into the equation?
I usually just break it out, as a percentage of what I buy. So, let's say you buy, $100 worth of products and you have $5 in sales tax. So I might allocate $1 to, $1 to 20% of for every $20. I wouldn't keep it separate because, for example, let's say you're buying mulch and there's sales tax on mulch. That's the cost of the mulch. With the sales tax, it's all part of the cost of the mulch. It doesn't make sense really to track sales tax separately. So I would just allocate the tax expense across the different line items.
Okay. A question about sales of items. What is the difference between calling them inventory or not? For example, sales of an individual vegetable.
Well, when we're creating our items, the real thing is that we're calling them non-inventory part. We're not actually going to count individual items. So it's either, so I would say it's a non-inventory part.
Cool. Next, how does using a journal entry affect tax reporting? Are you reporting, you might have just asked this or answered this. Am I reporting the full dollar amount in seed expense or just what I used?
Just what you used. So, for example, if you buy $500 worth of seeds, but then you have $100 left over in inventory, your actual expense is going to be $400. And then next year, you're going to have the $100 worth of expenses. But you also, I'm not a tax accountant, so you would want to confirm all of this with your accountant when you file your taxes. A lot of accountants will want to see your balance sheet to make sure that, all those adjustments. So if the seeds disappears off of your balance sheet the following year, then they want to make sure that you're recognizing that expense.
Cool. Could you go back to using the journal accounts to deal with different kinds of money taken in on one day, say at a farmer's market, like checks versus cash versus credit card receipts?
Sure. So let me just go back to the PowerPoint. I don't know if this visual will help. But basically, what happens is that you have all this money coming in from the different sources, and it's also being used to purchase different products. So what I like to do is I like to have a holding account, which you can call farmers market sales. I usually call it daily sales receipts. So, but you want a little bit of some kind of holding account so that you can say, I got all this money in. I sold vegetables and I sold eggs and I sold my value-added products, and I'm going to put it in my wallet. I'm going to put all this money in my wallet, and then I'm going to take it out of my wallet in different chunks and deposit it into the bank. So let me show you how that looks in QuickBooks. So you'll go to Journal Entry. And I actually already did this. So, whether you want to call it your wallet or a holding account or whatever you want to call it, you can say, I had $2,000 in sales, and it came in the form of vegetable sales, egg sales, meat, birds, and flowers. But it was all my farmer's market receipts. So it goes into this little holding bucket in this case, I called it retail sales receipts. You could call it your wallet. You can call it whatever makes sense to you. And if you look at your balance sheet, you can see I've got $2,000 in retail sales receipts. So it's still an asset because, it's money that you have earned and you have it. You just haven't taken it to the bank. So we've recorded the revenue. We now have the money here, and then we're going to move it from this bucket, from the retail sales receipts, into our checking account. So we have $2,000. So you can record a deposit, and you would say it's from retail sales receipts because I'm taking it out of that bucket and I'm depositing it into my checking account. So maybe, you go to the bank and you've got $1,500. And then, so you'll save that. And then the next day, the rest of it comes in, and it's $500 that came in from the credit card deposits, because that just automatically goes into your account. So now in the original journal entry, we recorded the different types of revenue. And then using the journal entry and the deposits, we have the farmer's market sales there, and now it's in our bank account. So we did this in two phases where we took the money in, we recorded how it came in, whether it was from flower sales or vegetable sales, and then in the second step, we deposited into the bank account, whether it was with checks or with cash. And if we go to the balance sheet, we should see that is now gone. The daily sales receipt is gone because we've now deposited the money into our checking account. More questions?
Yes, ma'am. Here's one that I feel as though you will be able to answer. Are there any point of sale systems that you can recommend that interface well with QuickBooks?
No, unfortunately I don't. I don't have enough experience with point of sale systems at this stage to make any recommendations.
Next up, this person makes an invoice for CSA customers to track their individual payments. Would that be the same thing as using sales receipts?
Well, invoices, in the same way of pay bills, if you create an invoice, you need to receive the payment. If you do a sales receipt, you can just, put it into, you can just receive the money and you can deposit it to your checking account, or, if you get the check, you can just put it in undeposited funds so that when you go to the bank, you can then take all the checks at one time. Undeposited funds is another way of saying your wallet. You have the check in your hand, but it hasn't gone to the bank yet. So sales receipts would probably be an easier way to do that, rather than creating the invoice, receiving the payment, and then making the deposit. Sales receipts, you can just do a sales receipt and then make a deposit.
Great. For classes questions, can you use classes to track more than one category of things? For example, to track products, but also to track multiple farmers, such as assigning a transaction to farmers markets and to, XYZ farm.
Well, that would be an example of when you would use customers and classes. So you would want to, use the customer function to track what market you sold to, and then you would use the class function to track, was it vegetable sales or was it flower sales?
Great. we had one that I missed. Here we go. Could you go back into the check and credit debit icons? Is there account info that's stored in there or not?
Um, the check, I'm sorry, can you say that, read that question again, please?
Sure. The into the check and the credit slash debit icons. I can
Um,
ask for clarification if that's not making sense.
yeah, because I'm not sure if
Okay.
you're asking about the sales receipts or a journal entry or write checks.
Okay. In the meantime, moving on. If you change the price of a sale item, QuickBooks warns you that it will affect your past historical reporting. So this person currently ends up creating a new sale item with the new price, but is there a better way to do that?
It should ask you if you want to, and then you say yes or no. Um, when you change the pricing. It should only be forward going. So maybe a function of getting a newer version of QuickBooks.
Uh, okay. Um, can you use QuickBooks to print invoices and receipts?
Oh, sure. So let's say you create an invoice, customer, vegetables, CSA, print it right here. You can save it as a PDF, or you can just click print. You can
For the
also
receipts,
email it straight away from here. Oh, and actually, while we're here in invoices, remember when we were entering in expenses and let's show you real quick. So let's say you bought seeds and you wanted to bill it to a customer, and you clicked billable here. That when you create the invoice, then you can add time and cost. So all those items where you checked billable, yes, it's billable, then you can add it here.
cool. With a sales receipt, is there a way to know if a customer who signed up did not pay?
Well, you can then go into the customer center, and you can find any one of your customers and see what their um, transaction history is. Just make sure you set the dates to all, so you can then see all the payments all that you've made and all the invoices you've written, so you can track.
And this is the last question I've got now, so if you still have one, feel free to write in. We probably want to switch over to doing carrot project questions in about 5 minutes or so, unless we've got an influx of unanswered questions coming in. For the meantime, how would you input owner equity? Would you use a general journal entry, or is there some other way to do that?
Well, I would use a general journal entry, but if you do, you have to have an equal and opposite transaction. So if you are creating owner's equity, I thought, let's see, farm equity. So let's say you want to increase your farm equity by $1,000. Well, how did that? What did that equity go to? Did it go into your checking account? Did it go to livestock? Did you buy seeds? So if you want to put in some equity into the farm, you need to have an opposing transaction of equal amount.
So Julia, this is Beth here.
Oh, hi,
Can
Beth.
you just give a few examples of what those opposing transactions would be?
Oh, well, it would be like if you have, for example, if livestock was born on the farm,
Mm-hmm.
and you want to have the value of the livestock on your balance sheet. Well, now you've got $1,000 of equity, and now you've got $1,000 worth of an asset. Maybe you took some of your own money and you bought deer fencing. So, you put in $1,000 of equity, and then you have $1,000 that you spent on deer fencing.
Okay, great. And then I have another question about when you were talking about keeping track of the inventories of the seeds, which I would consider like a supply versus inventorying like a sales item. Is it the same as having a category for prepaid expenses, or it's different? 'Cause I would think
no, prepaid expenses is, for example, if you put down a deposit on something. They're both assets, so in that way they're very similar. But a prepaid expense is, like if you pay your insurance in advance of the year and you want to allocate it over the course of the year. This is starting to get really technical, but you're using 1/12 of the value of the insurance each month. So, if you pay it on February 1, you've got 11 months of prepaid expense. And then on March 1, you have 10 months of prepaid expense. And on April, you have 9 months of prepaid expense, or so on. That would be also journal entries and prepaid expenses, and more of a brain twist than I think is really necessary.
So if it's a physical item that you have sitting around, then it's actually supply inventory. It's not prepaid expense.
Correct.
Okay. Great.
Okay, we've gotten in another question. Can you differentiate between two different co-owners and how much they've put into the farm's equity?
Oh, absolutely. You can just put in different, I just created one account for farm equity, but you could say Susie's equity and Bob's equity. You would just go to the chart of accounts, and you'd create a new equity account for Bob. Bob's equity, and then you'd create one for Susie's equity. So just as simple as that. Now you've got the two different equity accounts. So when you do the journal entry, instead of doing farm equity, maybe it was Bob who put it in. Oops. Maybe it was Bob who put it in, and maybe Susie, maybe Susie bought $2,000 worth of something. Maybe she bought $2,000 worth of livestock. So you can absolutely do that, and then you can go to your balance sheet and refresh, and now you'll be able to see Bob and Susie's equity on the balance sheet.
Follow-up question from the person who asked that. Should Bob and Susie be sub-accounts of the farm equity or on their own?
Either way. Yeah, I created farm equity just to have that there, but it doesn't have to be a sub-account.
Okay. Someone has used something called owner's injection of capital when she had to infuse some cash into the business to cover a variety of pending expenses. Mm-hmm. Is that a good idea, a bad idea?
Well, that would be an equity account. It's the same thing as, owner's equity. You're putting money into the business. Now, if you want to loan the money business, you may want to create it as a liability account so that you can then pay yourself back. But, if you pay yourself back, then you need to make sure that it comes out of that same account. So maybe, Bob wants to take equity out of the farm. So, we write a check to Bob, and, we're going to take out $1,000 of his equity. So now we've reduced his equity in the farm. We're using the exact same account name that we put his equity into to then take it out. That's where I think sometimes people get tripped up, is that they have one account name for when they put the money in and a different account name for when they take it out. But the net balance of his equity is the same. And so if you use the same account for the influx and the distribution, then it's a neater tracking system, cleaner tracking.
Okay, so I'm realizing that was a second part of a question that was submitted in two. So here's the first part. Maybe this will clarify that a little bit. Would you use a journal entry if you used a personal card or check to buy seed so that the cash itself doesn't flow through the business, but you want to show that the seed was bought from outside versus using owner's
I see.
injection of
Yeah.
capital?
You know
Sorry about
what?
that.
I create a checking account or a bank account for petty cash because that happens all the time. So I'll create a bank account, and you could call it Julia's wallet. You could call it petty cash. You can call it cash drawer. But it's a way to track it. I mean, I always recommend that you keep your personal and business finances separate, but I recognize that things get a little sloppy sometimes, and so I have a bank account called cash drawer or petty cash to account for exactly those transactions.
Great. We've got somebody who's looking for a book recommendation. She will soon have renters on the farm, and once that begins producing, she'll need to add employees. She's wondering if there's a book that she could look at to learn about multiple property management.
Oh, gosh, I don't know.
Or a source for that.
Okay. I don't know. I'm sorry.
No worries. Okay, well, does anyone else have any other questions, either about QuickBooks subjects or about the Carrot Project and our loan and outreach? Because that's everything we've gotten so far.
Okay. Well, I want to thank everybody, and certainly there's more tools on how to use QuickBooks on my website. There's my email and phone number if you've got follow-up questions. Thank you all very much, and thank you, Jenny and Vanessa.
All right, fantastic. Thank you, Julia. Okay, so if anyone has questions for Beneth, now would be a great time to ask them. For those of you who maybe don't have questions specific to the Carrot Project, I would just note when you close out of this webinar, there will be a survey that pops up asking you, if you feel clear about the things we talked about and what you would improve for next time. If you could just take a moment to fill that out real quick, that would be super helpful for us so we can make it a better webinar next time. And if you've got any other questions, feel free to contact me or stick around and ask them. Beneth, was there anything else that you wanted to say about the CARE project or our loan programs that I did not cover at the beginning?
No, I just want to encourage people to contact us or Julia with follow-up questions that they have, because we're always here to continue helping with these kind of topics, not just on the webinar. So please keep in touch and contact us if you have anything else that you want to clarify.
Absolutely. Okay, so I'm inclined to just sort of stick around for a minute or two in case people are formulating questions and see where that goes. Okay, well, haven't gotten anything yet, so if anything springs to mind in the next couple of days or the next couple of months, feel free to get in touch with Beneth. And you can feel free to email us, call us. We also have a Twitter account, which you're more than welcome to follow, in which we're often posting news and information. That's carrot__project. And you can also like us on Facebook, where we are also posting stuff all the time. Okay, so in the absence of other questions, I think we can call that a day. Thank you so much for attending, everyone. And thanks for all of your wonderful questions. I think this has been a really good discussion.